What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and the craziness is continuing. The game is moving forward, and we are now going to look at really the second part of how this whole thing with GameStop that has evolved into so much more than just a short squeeze on GameStop is turning into. We're not going to look at the actual mechanics of how this thing is playing out from the short squeeze, the gamma squeeze by the market makers, delta hedging. If you want the technical explanation of that, I made a whole video about that. Go and watch that video. But we're looking at today, it is Thursday, January 28th. We're going to be looking at how this thing is starting to unfold and what might be happening next. And boy, is this getting more and more exciting. Ready? Let's dive in. All right, so quick recap on what has happened to GameStop, the other stocks, and Wall Street bets on Reddit since I posted my last video explaining really what triggered the big squeeze. So obviously, people know by now hedge funds are getting pinched and squeezed everywhere. There's banks, there's massive short positions that are still unknown, but we know of at least two hedge funds, notably Melvin Capital, who were wiped out. And Melvin Capital actually had to reach out to its buddy Citadel to get a cash infusion. There were talks of a buyout, of an actual acquisition to fully bail them out. But at this point, looks like Melvin Capital is thinking that just the cash infusion is going to be able to keep them going, at least for now. Now, Citadel. I mentioned Citadel. They are the ones that gave Melvin Capital the cash. You might be thinking, I recognize that name from somewhere. Yes, Citadel is the firm that pays Robinhood for their order flow. So when you go in and you are trading on Robinhood, you're placing your buy and your sell orders, Robinhood is taking all that data from everybody, they're sending it over to Citadel, and Citadel gets to see all of those orders before they're actually executed on the market. And so if there's enough money going in or out of one or multiple stocks, Citadel can front run those trades, and they can see in real time, like I'm talking microseconds here, they can see, hey, if we buy or sell this stock, we can get in front of that because there's a lot of money right now trending that direction. This was one of the things that a couple of months ago sparked a giant run up in Hertz, because Hertz rental car going bankrupt, all the Robinhood traders start to buy it, but all the high frequency traders were front running those trades, and so it just doubled down on that crazy run up in stock price of Hertz. All right, so we'll get back to Citadel in a little bit. So at this point, after Melvin Capital gets their cash infusion and these stocks, not just GameStop anymore, there's AMC, there's Bed Bath & Beyond, there's Nokia. All these stocks that have a very high short interest are starting to get purchased like crazy because all of these retail traders are looking at these and realizing this is a fantastic opportunity. When there's such a high short interest on a stock, that means that's the crowded trade. That means if enough people buy it, if the momentum shifts a little bit, they have to start closing those trades out and the price will start shooting up. So it's actually a great investment strategy, and it's actually not new. Looking for high short interest stocks to try and trigger a squeeze on, something that Wall Street has been doing for a very long time. It's not like something that Wall Street Bets or Reddit invented. This has been something that, it's like a legit trading strategy. But the big boys don't like it when they start getting taken down by the little guys, and so they start calling around and saying, hey, we need to shut this down. So first, Wall Street Bets got taken down from Reddit, and I believe as of now it is back up, but it got taken down from Discord as well. The Discord group of Wall Street Bets, they got taken down, and I do not think at this point they have been reinstated yet. So there are being calls placed around. There was an announcement that the White House was monitoring and looking into this. There are rumors that I have no idea if they're true, but there are rumors that the White House and the SEC actually was putting in calls to Robinhood to tell Robinhood to delist these securities liquidation only, so that nobody could buy them. They could only be liquidated. And probably because SEC and White House, these politicians, they were getting pressured by all the hedge funds and the dark money, because they were saying, hey, this is going to put us out of business. Like, we have way too much money in the short positions. If this keeps on going, we're going to go down, and that could cause some cascading effects across the entire financial industry. So you better put a halt to this, or else there could be some unforeseen consequences. And so the problem is, at this point, once you have Robinhood banning these securities from being bought, and some other platforms as well. Once you have these groups online now getting shut down, it's no longer even just a political thing. Like there were some political groups and some people of political affiliations that were getting shut down for their, what they were saying on different social media platforms. It's not even like that, of like a free speech thing anymore. Now it's just, hey, you're causing us to lose money, so we're going to silence you. You have to wonder at this point, like, when will this start to backfire? And probably it's happening right now. It's only making the motivation to continue this in any way possible for the average trader out there even stronger. You've got some giant names jumping on the bandwagon now, starting to really snowball this thing. To the point where, as crazy as this sounds, this GameStop short squeeze could actually be something that's uniting our country right now. You see people like Don Jr. retweeting Dave Portnoy, and you see Ted Cruz retweeting and agreeing with AOC, and you see Robert Reich, huge socialist, saying the same things that people like libertarian / anarcho-capitalists like Bob Murphy are all agreeing on. It's really quite spectacular. But the battle isn't over yet, as we all can see right now. In fact, even in the short interest on these companies, it is far from over. And with short interest staying as high as it is on some of these companies, even like GameStop, these stocks can go up a lot more. Again, just in case you don't understand the mechanics of the short squeeze or what option buying does to the underlying stock through market maker delta hedging, that's the gamma squeeze people are talking about, go back and watch my first video on GameStop. But again, just as long as the short interest stays up anywhere near where it's at right now on a lot of these stocks, this thing can continue to pop to astronomical levels. That's part of the reason why Tesla made such a big move after consolidating between that $250 and $350 range for, a couple years. The short interest was so high on it that it just kept on going higher and higher and higher because everybody that was short had to keep on closing out, continuing to adding to that buying pressure. So it really makes you wonder, why would Robinhood stop purchases, turn these stocks into liquidation only? Meaning you can't open up a new position, you can only sell what you already have. Because really, they're kind of shooting themselves in the foot for the entire brand that they've built. I mean, their name is freaking Robinhood. Well, like I mentioned earlier, they get paid hundreds of millions of dollars every single year for sending order flow to companies like Citadel. So they probably got a call from Citadel saying, hey, if you don't put a stop to this, we are going to stop buying your order flow. And Robinhood doesn't make money any other way. I mean, not substantial amounts of revenue any other way. This is their main portion of how they make their money. And it just throws salt in the wound because Citadel was making bank from this because they were probably front running all of these trades by buying GameStop and AMC and KOSS and Bed Bath & Beyond and these companies that were skyrocketing. Citadel was probably front running all of that and making enough money to then be able to go out and bail out Melvin. But now that they have a stake on the other side of it, they're probably making calls and saying, hey, we want this to end now because we made our money, we had our fun, and we don't want our buddies to lose everything. Now, some people are calling for increased regulation to stop Reddit traders from being able to manipulate markets, and some people are calling for increased regulation on the big banks and the hedge funds for being able to open up positions like this that cause this market mayhem in the first place and being able to shut traders out of the market on a whim. Now, you could probably already guess my position on this, but regulation, increased regulation, regardless of who it's directed at, is the worst solution possible here, and here's why. Everybody knows that shorting carries unlimited risk. When you short something at $5, you bring $5 in on that. Whatever price you have to buy it back at is going to give you your either your profit or your loss. If you buy it back at $0, that means you profited $5. That's the most you can make on a short, is by having what you shorted go to zero. You have a maximum gain potential. That means on the opposite side, your maximum loss potential is unlimited. There is no maximum. If you have to buy back the stock at $10, $100, $1,000, $10,000, there is no upside to how high something can go. Further than that, everybody knows that when you enter a crowded trade, you're picking up pennies in front of a steamroller. And having short interest on a stock that is over 100% is the definition, it is the epitome of a crowded trade. Everybody is doing that. Now, these firms have every right to short whatever stocks they want. Shorting plays a fantastic regulatory role in the markets. Short sellers are far more effective and far more powerful at delivering proper regulation to discovering fraud because there's a built-in incentive to it, and they sniff out in the market things that are overvalued. Shorting plays an invaluable role in the markets, and the impact that short sellers have on the market can never ever be fully replaced by increased regulations. It's just not possible. However, when you play stupid games, you win stupid prizes. And when you short a stock at $5 that has 150% short interest, that's a stupid game. And the stupid prize is going to be having a cover at $350. They 100% deserve the explosion in price that is happening right now. There's no risk management. There's just pure exposure to blowing up. Now, at the exact same time, all of these Redditors, all of these retail traders are doing the exact opposite. There's very good risk management from a lot of people going into these trades. You have limited loss because you're buying a call or you're buying stock. The most you can lose is what you put into it. If you quadruple your money, you hold on, and then it crashes 75%, you still didn't actually lose anything. Meanwhile, their upside potential is unlimited. It's the opposite of the short sellers. Further than that, the coordination is in public, it's not being posed as advice, and it's individual traders making their own decisions with their own money versus private collusion through a couple of people that control other people's money. There's just no comparison. So the markets are doing what the markets do best. Short sellers try and find a company that is overvalued and profit off of that. Look at Nikola. If it weren't for the ability to short sell, there wouldn't have been the motivation to go into the market and find all of the lies and all the fraud with this company, because you wouldn't have been able to profit off of that. That's why regulators are completely incompetent at catching fraud like Nikola. On the other hand, long investors are way better at punishing short sellers and manipulated markets, again, than regulators could ever be. Case in point, look at what's happening right now. And you say, but wait, the game is still rigged. Robinhood is now colluding with all of these giant companies, and they're preventing people from being able to do this. This isn't freedom. This isn't free markets. We need more regulation to prevent the free markets. First of all, that's a contradictory statement. Second, if people can't see by now that more regulations always backfire and punish the little guy and reward the big players, then there's nothing that can happen that will convince them. Free markets are far better at punishing fraud, far better at punishing manipulation, and far better at actually taxing Wall Street than even taxes are. So what's the solution? Nobody should be using Robinhood anymore. By the end of the week, Robinhood should have 0 users. If they can do this, they can do anything. If they can stop people from buying something just because their big brother is losing money on it, that means it is not safe to invest on their platform. And I've been saying this for years for other reasons, not to use Robinhood, because there's just no reason to. The user interface isn't all it's cracked up to be, and the fact that they sell order flow never made up for the amount you were not paying in commissions. You were paying more in the worst fill. Been saying this for a long time, but especially now, Robinhood should have 0 users by the end of the week. There's just no reason to use it. Their punishment, their free market punishment, not regulators coming in, but their free market punishment should be bankruptcy, because that will send the message to everybody else to play fair. If you don't play fair, you get crushed. If you do play fair, you're rewarded with more accounts and more assets under management. Now, the real exciting part is what is next, because it looks like the attention is shifting and it is now starting to get focused, at least a little bit, on silver. Now, this might be complete wishful thinking, but it's possible that this gains momentum. There's a ton of talk now going around the internet about all the manipulation in silver and gold markets. Not to mention, if the goal is to profit off of taking down the big guys who have been manipulating the system, there is no better candidate than precious metals. Sending silver and gold to the moon takes out the financial system. It literally will break it. And just as a side note, if gold and silver go to the moon because of Wall Street bets, and not because of the Fed, not because of a dollar collapse, not because of government spending, not because of hyperinflation, not because of war or anything else, Peter Schiff is going to lose his mind. But it's a little bit of wishful thinking at this point, because there are a couple of pieces of focus that have to be in place for something like this to work. It's not as simple as just buying calls on GameStop. For a targeted attack on gold and silver to cause a massive short squeeze, which would be the biggest short squeeze in history. The focus has to be on physical delivery only. Buying futures, buying miners, buying ETFs that are not specifically clear that they only hold physical gold or silver bullion will do nothing. All you're doing then is buying paper or buying shares of something in a ground. It won't do anything to the actual squeeze, to the actual short positions, because they're short from issuing paper. So if you're just buying paper, they can issue as much paper as they want. The only way this causes a squeeze is if the physical supply runs out. So the key is to make the paper fail. And the paper only fails when deliveries fail, and deliveries only fail when the supply runs out. So 2 action steps. Regarding stocks and options, trading alternatives. For Robinhood, if you really like that streamlined, simple user interface, a great alternative is going to be Gatsby. Small company, great app. I'm actually a small investor in the company itself. And at least at this point, they have not locked anybody out of buying or selling calls or puts on any of these stocks that Robinhood has locked people out of. If you're looking for something more robust that won't do this to you, many of the discount brokers are still a great option. I know there's a lot of information swirling around online that places like Schwab and E-Trade or TD Ameritrade are colluding with the big players on this as well, but we need to make a distinction here. When a stock gets halted, that's an exchange thing from the price dropping too fast. That's not the same thing as not being able to trade it because they're colluding. That's just sometimes stocks get halted when their price drops too fast. That happens a lot, and that has nothing to do with where you're trading. Delisting or moving a stock or options into liquidations only, that's the red flag. So if the platform you're trading on has moved something into liquidations only, meaning you can't buy more of it, you can only sell what you have, that's a sign that the platform is not trustworthy. Now, in addition to that, heightening maintenance requirements, margin requirements. I used to work at Schwab. When they would do this, it's specifically because they're on the hook for the money if somebody blows up their account. So if you go in, you have an account with $100,000, you load up with your day trade buying power, you buy way too much of a stock, and then it crashes within the day, and you end up owing the company money because of that. They're on the hook for that. If you don't have $400,000 and you owe $400,000, it's got to get sent to collections, right? There's no way out. So some of these larger companies heightening up the maintenance requirements, reducing the amount of leverage or margin you can use on some of these extremely fast moving stocks, that's not a red flag. That's just the brokerage firm covering itself from being owed money. Now, second action step, if you want to get in on the gold and silver play before it starts to go to the moon and before a squeeze starts to develop, if you think that's a possibility, you need to get your hands on physical gold or silver as soon as possible. Supplies are running out. The LBMA is on its last leg. The amount of gold that they have in available float is a lot less than what they actually say, because a lot of what they say they have in available float is actually already reserved or owned by central banks or ETFs. And so the amount of actual physical gold and silver available for delivery is a lot less than what the market is saying it is. So if you're going to store it somewhere and you're not going to take physical delivery, you need to make sure it's in allocated and segregated storage in a private vault, not a government vault. I use OneGold. I really like OneGold. Fantastic app. You can store it in different countries, in private vaults, and it's allocated and it's segregated. The better option is to request physical delivery, so it actually comes to your house. Again, you can use OneGold for this. Very easy to do this, straight from their website or their app. If you're going to do this in an IRA, you need a self-directed IRA that will hold physical gold or silver. You don't want to be getting an ETF on something like this. I use iTrustCapital. They make it really easy, very simple. It's very cost effective to store physical gold or silver underneath your IRA. And at the very least, if you wanted to do this with jewelry, use Mene.com. They make jewelry out of investment grade gold, and their prices fluctuate throughout the day because it's actually based on the price of gold. All of these are linked in the description below, and that's all I have for you today. These times are crazy and it is exciting, and hopefully it is just getting started. Thanks so much for watching. Have a good day.